Hey everyone, welcome in to another daily editorial here on the KE Report. I'm chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. We will get into some of the action in the precious metals today as we are seeing a bit of a rebound. But first and foremost, a lot of people, practically everybody, is looking at and talking about the Jackson Hole meeting that is ongoing starting today, and we will be getting a speech from Powell tomorrow. A lot of comments on if Powell will say anything about new inflation targeting for the Fed or about yield curve control. I've been on record today and throughout, I think, last week saying that I don't think that too much is going to come out of this meeting. And quite frankly, what does matter is that the Fed has said they're going to remain easy and do what they need to so-called support the economy, which we know really means support the markets. But Jordan, I know you have some opinions on this trading action around Fed meetings, around central bank comments. Please share with us how you view these comments and how you potentially trade around them.
Well, first of all, I'd say I don't view these comments because I don't care what they have to say. Secondly, I don't really advise trading around them. I mean, unless you're on this upcoming Fed testimony, or decision, whatever it is. I'm sorry, I should know. I should know that exactly what it is. But look, it's more important how the market is set up technically and how positioning is as far as sentiment. And we've had a little bit of a correction in precious metals. We're going on, close to the third, maybe starting the fourth week now, if we're looking at number of days. And, you could look at this and see and say, well, maybe we have a bit of a mini double bottom here in some of the stock indices, and gold and, silver is not making a double bottom. It's making a higher low. So that looks good. But then you also have to weigh the fact that when you compare our bottom in March to the 2008 bottom in October, what happened after the move 4 or 5 months. I mean, there's strong similarities. And we've said this before, but that correction in terms of time lasted 2 months, the one in 2009 that's comparable. We're only in the third week or the beginning of the fourth week if you're looking at the number of days. So I don't think that this is going to be the start of a huge new leg higher for the sector, because it's just a matter of where positioning is. And then we're looking at what history is telling us. And after we had this great move and we got really overbought and we had this reversal, the weekly charts are looking bearish, at least from the last couple weeks. So you take all those things into account. That's not going to be changed by statements from the Fed or Powell. I mean, he could say something super bullish for gold, and what you'd get is you might get a move for a day or two. You'd get a lot of short covering. But then you might get this big reversal. So, I mean, we've seen that happen with the Fed over and over again, where there's a reaction one way, and then a day or two later, then the market goes the other way. So it's not going to help us make money to focus on what the Fed says or what they do. It's more important to assess the market. What's the trend? What are the current fundamentals? What's the positioning? What's the sentiment? And that stuff is far more important, is going to be far more of a driver than the Fed. And so I think regardless of what they say or how the market reacts, I think the probability is that this correction, or you can call it a consolidation, is going to continue for probably another month or so at least. There's just nothing that the Fed can say that's going to bring in a huge amount of new buying that's going to push the market into new highs and kickstart this new up leg. The market is just not in position for that yet. I mean, it will eventually. So with that, and the other thing about the Fed, Corey, is they usually follow the market. Of course, the market anticipates, at times the market anticipates what the Fed is going to do, and then trades or reveals it that way. But the Fed ultimately follows the market. And so, I mean, if we see long-term rates start to rise aggressively, then we could see yield curve control like we saw in the 1940s. I think it's inevitable. We will see it eventually. So I know this is a long diatribe, but I would just tell people, it really doesn't matter what the Fed says or does. They follow the market, and the market is its own beast. Pay attention to the market, and instead of like every moment that you spend following the Fed or researching it or assessing what they might do, you should be spending that researching individual companies because that's going to help you make a lot more money in the long run than worrying about what the Fed is going to do. It boggles my mind how people get so obsessed with this.
Yeah, fair enough, Jordan. The only thing I would say is that it does matter when the Fed truly changes course. That can be more of a driver because it is more about, I think, long-term policy. But fact of the matter is the Fed has already told us that they're going to remain easy. And I don't think that they're going to be changing any massive policy because of the fact that we haven't had any major shocks to the markets. So that's to your point that the Fed just follows the markets. As you mentioned, though, this precious metals correction, you compare it back to 2009, where that took about 2 to 3 months. We could have another month, maybe a little bit longer in this current precious metals correction. What are some of the levels that you are watching at in terms of either percentage decline or actual dollar term levels for either the precious metals or the underlying ETFs?
Well, for the ETFs, I mean, I'm looking at GDX day 4 or 5 of the correction. That actually got into the high 38s. And so there's pretty strong support at 36, 37. And GDXJ, I mean, that actually traded in the high 54s, and that has strong support around 51. So as far as price, I'd really like to see another leg down. And I think the probability favors that we're going to test those levels. I think it's more likely than not. Now, turning to the metals, it's pretty interesting what's happening. I mean, if you're looking at the candles, the daily candles, you could say, yeah, those look pretty good. Gold, we have a mini double bottom. Silver has a higher low. It's showing more strength than gold. But I still think that, we could potentially see in gold a move to the low 1800s. There's that support to worry about. Gold, I mean, it made that bullish hammer, I think August 11th or 12th, below 1900. So I'm still looking for gold to potentially correct to the low 1800s. And silver has held up a lot better. I do have to say that. But silver, I've been talking about 21 as a worst case scenario, but looking at the daily chart, Corey, there is a lot of support, I want to say, in the 23 area. So, maybe if silver continues to outperform, I could up my worst case scenario target to 22. But yeah, I don't see any huge moves coming, to be honest, Corey. I mean, we could bounce for a couple days in anticipation of what the Fed says. Then we could get a sell-off after that, or maybe we get a big sell-off tomorrow and the next day after what the Fed says, and maybe that sell-off leads to a short-term bounce. So that's how I see it. I don't think we're at the start of another huge leg higher, not yet. And so with that in mind, I would focus more on company analysis and stock selection.
And so, Jordan, regarding stock selection and company analysis, does that mean that you are lightening up on some stocks, trying to build some cash for when this correction is over? Or are you already sitting on cash? How are you playing this?
Well, I mean, I've said that I think the best way to play the sector is you're going to make the most money buying and holding. So I'm buying and holding, trimming big winners. I did trim one thing recently, so I'm pretty much fully invested, but I'm cautiously watching everything. And I mean, it's possible I could swap out one or two underperformers for, one or two stocks that I missed, but that's I'm happy with what we own. And look, successful investing really doesn't require that many decisions. It's pretty simple. I mean, if you get into a bull market, you're going to make the most money buying and holding. So for me, it's really about first and foremost, it's about company selection, and secondly, it's trying to get in them at a good point in time.
Okay, well then, Jordan, just to circle around to our first comment here, and as you said, watch the markets, let them dictate where you see precious metals are going. What are the key markets that you're watching, and are any markets at key inflection points right now?
Not yet. I mean, I think that, another thing to look at, Corey, is precious metals are underperforming the stock market right now. Now, in the big picture, they're still bullish. Those ratios are still in long-term bullish trends as far as precious metals outperforming the stock market. But in the short-term sense, as precious metals are in a correction, they're underperforming the stock market. So that's something to watch. At some point, we want to see precious metals strengthen and act better against the stock market. That usually is a leading signal. We tend to see that before the start of new moves higher. So that's something I'm keying on.
Okay, Jordan, we'll wrap it up there. Thanks as always for your time, buddy. I will post a link to your website, The Daily Gold, where everyone can go and follow along with some of your free content and also sign up for your newsletter. I highly recommend it. Thanks for your time, Jordan. Have a great rest of your week.